Welcome back. Stimulus stalemate. House Speaker Nancy Pelosi says she and Treasury Secretary Steven Mnuchin are, quote, just about there in negotiation talks, though there's clear sticking points over money for state and local governments. Liability protection is another sticking issue as well. That's for businesses as well as schools. Investors anticipating a deal may be what's causing the recent bout of choppy sessions. Joining us right now is Mahoney Asset Management CEO Ken Mahoney. Ken, good to see you. How are you riding this wave as we await stimulus? Do you think this is going to be a big market mover when it does pass?
Yeah, when it does pass, it will be a big market mover, and it really is like a poor episode of deal or no deal. But, you know, look at the futures this morning. They're up a little bit. Dow's over 28,000. Somehow, with all this uncertainty, look, the uncertainty of the presidential election, I think your countdown shows, what, 10 days, 11 hours, so many minutes, the uncertainty about the virus, the uncertainty about this deal. And yet this week we've had pretty good earnings reports coming out. Again, minus Intel, minus IBM. They're perennial losers when it comes to earnings. But we've gone through about 160 of the S&P 500 companies, and I would say about 88% of those companies either met or beat expectations. And upset for next week, well, gosh, we have Apple, Google, Microsoft, all the technology. And Maria, you're going to see the big difference again. You're going to see the haves and have-nots because of the virus, that stay-at-home economy that benefits, you know, cloud and artificial intelligence and robotics and so forth. But these major technology companies, on top of all the uncertainty next week, will probably be the biggest focus for the market, aside from all the other crazy things that are going on.
You know, I'm so glad you mentioned the stay-at-home stocks, because this week we did a comparison of Zoom versus ExxonMobil. And I really was struck by this because the revenue in 2019 of Zoom was $622 million. The revenue in 2019 of Exxon, $264 billion. And yet Zoom has a larger market value than Exxon can, okay? The Zoom market value is around $152.7 billion, and that versus Exxon's market value of $142 billion. Is this getting all 1999, 2000 on us, where we were investing in companies because of clicks to a website? Does this seem right to you?
That's a hard one. Look, back in the 1990s, I remember that famous Barron's cover. You probably remember it too, Maria. It was actually a scale, and JDS Uniphase on one scale and about 9 huge brands on the other, like General Mills and so forth. It kind of feels like that.
Exactly.
But you know what? You remember that? So, but you know, it's like what Wayne Gretzky said, though. It's not where the puck is, it's where the puck is going, you know? And if we're still have this problem with the virus and we're not having demand for oil and there's more supply out there, you know what? The multiples can continue to contract for Exxon. And yet on the other side, for Zoom, yeah, it does feel kind of like that 1999 thing, but at the same token, again, that puck is going forward, and we're going to be living with this thing quite some time. Even when the pandemic's over, there's going to be a lot of this remote learning. You know, university is now open to that. There's going to be a lot more of this kind of work from home, have this kind of home-life balance. So, yeah, it does feel lofty, but again, I'd rather go where the puck is going. I'd rather go where the growth is going, and I'd rather go where you have multiples that are expanding, and they're expanding in those areas, and the stay-at-home economy stocks, even if it looks kind of weird that the same market as Exxon and JD.
So you think the things we're doing now in stay-at-home will persist once COVID is behind, and those stocks will continue to gain market value?
Yes. Again, look, there'll probably be some barriers to entry. I mean, I don't know how wide of a moat we really have here for Zoom, because there's other competitors. Microsoft has theirs, and Skype and everything. So, you know, so we don't know really how this kind of a narrow moat at the moment. So the other players, but again, that industry is growing by leaps and bounds, and more, you know, people adapting to this. And again, I think after the pandemic, we're forever changed, and I think that's going to benefit those stay-at-home companies, including Zoom.
All right, we'll leave it there. Ken, it's great to see you this morning. Thanks so much.
Well,
Ken Mahoney joining us this morning on Investing. Coming up, the top moments from the final.